Welcome back to the Crypto Trends Podcast, where we cover all things cryptocurrency, blockchain, Web 3.0, and AI. I'm Robert Croak, and I am joined by my co-host, Armando Pantoja. Both of us and our amazing team are excited to bring you the best information, guidance, and strategies each and every Wednesday. So follow along and always remember to take notes and take action. Today, we're going to be diving right into the Bitcoin price action. A lot has happened since then, and Armando and I want to make sure that you're completely prepared for what we believe is about to happen next. After that, we're going to discuss the major developments in one of our favorite sectors, tokenization of real-world assets, and what that means for the coins within the sector moving forward. Listen closely to this section as we may be providing a few key new plays. The last thing we will address before answering the questions asked by you, our amazing audience, is the SEC attacking Ethereum, claiming they are a security. So buckle up, folks, because we have a lot to cover. And be sure to leave your questions in the comments section of the podcast. Okay, let's get into talking point number one, the Bitcoin update. For this episode, we're going to make the Bitcoin section brief. We've gone into a great amount of detail on Bitcoin in the previous two episodes and want to leave more time for other topics as well as your questions. So Armando, take our listeners into what you're looking at for Bitcoin right now.
I really like what I've seen with Bitcoin over the last few weeks, right? Is that we reached all-time highs about a couple of weeks ago. And we retracted all the way down around 60,000, like 17%. A lot of people panicked. A lot of people, we got a lot of DMs, me and you. People were completely crazy. But remember, Bitcoin went up from 40,000 all the way up to 73 in a matter of a couple of months. A small retraction is what I like to see in Bitcoin. I like to see it's a healthy retraction, right? We don't want something to keep going up. We're building a bubble. As long as there's impulses and corrections, everything's great. I like what I've seen so far with the Bitcoin price action. And you have to be able to tolerate these big moves, right? Because Bitcoin is an immature market. It's not where the stock market is. Stock market's been out for over 100 years. Bitcoin is fairly new. So yeah, there's going to be a little bit more volatility. It's going to be a little bit more price moving up and down. And to be in this market, you have to be able to tolerate those pullbacks when they come.
Yeah, I'd like to just add that in our last episode, we explained how these Bitcoin pullbacks are just really prime opportunities to load up on more altcoins.
Exactly.
And I'd like to touch on what you just mentioned that I think is key for our listeners and everyone following along, is that if you can't stomach the pullbacks and you can't stomach the volatility, take up stamp collecting. Do something else with your money. Just don't get into crypto if it's going to be a constant stressor for you, because during the development and the movements that we're seeing in crypto and the underlying blockchain, there is always going to be volatility. And that's why you need to always remember what I say. When in doubt, zoom out. Because remember, the last time Bitcoin was soaring, I saw that so many people were furious with themselves because they hadn't gotten enough money into altcoins. And if that sounds like you and you didn't use this pullback to dollar cost average into new positions, then I don't know what to tell you except for zoom out.
And look at, yeah, you're right. Look at the altcoins, Proppy and other coins like that. They're up 20, 30% today because, like we said, when there's a drop in Bitcoin, altcoins take deeper losses. And now they're experiencing those higher gains. And since Bitcoin hit the low 60s, it's already back to 71. At the time, at this recording, what we're recording the podcast right now, and I believe it's just getting started. When looking at this Bitcoin chart with our entire team, we can see that it's a powerful, powerful movement happening right now. It could even bring the price to around 80,000 here quickly in the next few days, or maybe even the next couple of weeks. What do you think?
Yeah, I think for me, the first price target I'd be looking for is 75,000. And one thing we really like to do is analyze on-chain data, especially as it pertains to the leverage in markets. When analyzing the data this week, we saw something very, very telling, and that is the liquidation cluster at 75,000 that would liquidate almost $7 billion worth of shorts. So this is a key factor of where we go from here with this $75,000 price point.
Yeah, for those you don't know, there's an incredible amount of shorts in the market right now. There's a lot of traditional investors that just do not believe in Bitcoin, and they keep thinking that eventually this thing has to crash because they don't believe in the technology, they don't believe in the movement. So these are people who try to make money on Bitcoin going to the downside. And they can all be wiped out if Bitcoin hits that $75,000 mark. This is important to realize, and it can't be ignored. I like to talk about the rich, the elite, and the wealthy, and how they have control over the average person. Who do you think controls the market? Well, it's the rich, the elite, and the banks. They have complex bots and algorithms that make sure the odds stay in their favor. And they also control the market makers. So what do you think the bots are going to do when they have the opportunity to wipe out so many shorts who are probably wrong and in the wrong position in the market? They're going to take that advantage. So do you really think they're going to miss this opportunity to wipe out $7 billion worth of shorts?
Yeah, that's exactly how I see it too. Our job is to make sure that each and every one of you have a deeper understanding of how the market works so you can execute at a high level. By understanding what Armando and I just explained, we just really want to paint a picture that you can understand. We know that Bitcoin has already corrected 17%. Many of you overreacted, and we just want to make sure that doesn't happen and get you away from those knee-jerk reactions. We can see that the charts are showing great strength, and we also know that billions of dollars of weekend investor money can be wiped out at $75,000, and this all points to a move higher for Bitcoin in the coming weeks. So before we get into our next talking point, let's take a second to hear from our title sponsor, Proppy. Whether you're a real estate professional looking to modernize your practice or a buyer-seller eager to navigate the market with the latest technology, Proppy offers an unparalleled platform that simplifies, secures, and revolutionizes real estate transactions. Get ahead of the curve and explore how Proppy can transform your real estate experience today. For more info, go to proppy.com. And for the side hustle no one is talking about, go to proppykeys.com and learn how to mint properties and landmarks on the blockchain now. Okay, so let's get into talking point number 2. The bull market surrounding the tokenization of real-world assets and what that means to our listeners and where the investments lie within this strategy. Armando, take our listeners through talking point number 2 and help them realize that it's not too late to get in now.
Yeah, this one is very, very exciting, right? Is that since the first episode, we've talked a lot about tokenization of real-world assets. And when NFTs first, started getting mass, attention, I never believed in NFTs as images, but I do believe in using blockchain for real-world assets. And that's where a lot of these new tokens are starting to fit in. While our tokenization picks have been doing extraordinarily well, they've fallen in the shadows of the AI tokens. But we don't want people to lose attention on this huge market. We believe that tokenization is up next, just like we saw AI coins in the previous months. For those of you who don't know, BlackRock has officially entered the asset tokenization race with the newest fund on the Ethereum blockchain. Robert, take our listeners into this.
Absolutely. And before I do, I want to remind each of you what the tokenization of assets is. So simply put, this is creating digital shares of real life items. For example, let's say I have a painting worth $100,000. If I were to tokenize its value, I could sell shares of it to the public. This is applicable in almost every single sector, which is why this has the potential to be the next multi-trillion-dollar industry. And the easiest way to think about this is think real estate, fine wines, art, classic cars, collectibles. All of these asset classes are being tokenized right before your eyes right now, and these platforms are making it easier and easier to level the playing field for the everyday investor.
As of last Wednesday, BlackRock officially revealed its tokenized asset fund on the Ethereum blockchain. They aren't the first major corporation to enter this space. Others like Citibank, Franklin Templeton, and JP Morgan have already started experimenting with real-world assets and this blockchain use case.
Yeah, the entry of BlackRock in this sector is very significant, though, as they are arguably the biggest player that has entered this arena. And here's how they're doing it. The BlackRock USD Institutional Digital Liquidity Fund is represented, and it is called BIDL. A very tough one to understand because it's spelled BUIDL, and it is the token on the blockchain that they have backed using this fund 100% in cash, T-bills, and repurchase agreements. According to their press release, they will be yielding payouts via blockchain rails to all of their token holders every day, which I think is huge to have those payouts regular like that. And the biggest skepticism of tokenization has always been its lack of regulation and that it didn't seem very legitimate because of this. With major players like BlackRock entering the space, I'm sure this skepticism will be put to rest because they do things right and they're going to make sure to follow the letter of the law and make sure they protect their name and their investors.
Yeah, I like this space. I think this is really amazing. What I found so fascinating is that we're very early in this sector. We're very early in this space. And the sad thing is that there's a great opportunity when you're early. And there are a lot of people who are distracted, not paying attention and ignoring what's happening right now. We have the opportunity to get involved when the biggest players in the world are getting involved. What this shows me is that there's a major narrative around tokenization of real world assets, and it's starting to become mainstream. And this is going to skyrocket those prices within this sector. I remember one of the first tokenization coins we called out. It was Alliance Block, NXRA. It was a company that brought compliance and regulatory framework to the tokenization of real world assets. This is huge and has always been one of the biggest hurdles in this space. NXRA is up 100% in the last 2 weeks alone, and we can see a lot more success on the horizon. But you know we called this out months ago, and some of y'all should have been listening. Robert, do you know of any tokenization projects that maybe we should keep our eye on?
Yeah, one that I really like that hasn't gone too far yet is LCX. LCX is a utility token of its blockchain, which enables users to sign, encrypt, and secure digital assets on the blockchain. They believe that this will enable the future of tokenization, and I'd say they have a pretty good shot. Another couple projects that I really like, they somewhat get beat up a lot because of what's been happening with the courts and the SEC, are XRP and also XLM. Both of these cryptos have been building extensive lists of partnerships, and Ripple has been quietly partnering with banks around the world. So it's only a matter of time before major institutions start tokenizing their assets on the XRP ledger. Additionally, the price has really lagged the rest of the market, which is pretty typical for XRP considering the court case and all of the negative news around XRP for the last couple of years. So I still think at its current levels, it's a great entry point for XRP. And XLM is a great one to hold as kind of a hedge against XRP. So those would be two that I like a lot.
So to sum it up, we have LCX, XRP, and XLM. They're the tokenization plays that we have for you today. We're going to continue to provide more plays as we move forward with the Crypto Trends podcast, so stay tuned for more. I want each of you to go to the comments right now and drop your favorite real-world asset or tokenization projects in the comments. So let's move on to point number 3, which is what a lot of people are asking questions about. The SEC is now coming after Ethereum.
Yeah, every single time this thing seems to be going well in crypto land, the SEC comes up with some strategy and they come along and try to make an example of a coin like they did with XRP, now Ethereum. And last week it was reported that the SEC is pursuing an investigation to classify Ethereum as a security. And we could talk about that alone for hours, but it has been reported that many companies have already received subpoenas related to this probe and have said the SEC is demanding any and all financial documents related to the company's dealings with the Ethereum Foundation. The main thing I can't understand, Armando, is why wait until now? The SEC has been beaten down and beaten down and beaten down. We have all the major banks, some of the world's biggest institutions, some of the biggest countries, all are rallying behind blockchain and cryptocurrency and everything moving forward in this technology sector, yet the SEC is still hanging on and putting up a fight. That's the part I don't understand. It's like, what is their behind the scenes reason for this? Because it just doesn't add up.
Yeah, and think about it, they never come after these coins in bear markets. It's always in bull markets. And that's what I really don't like about the SEC and the government in general, is that whenever they attack Bitcoin or blockchain or crypto in general, it's always when it's an impulse or the price is moving upwards, which is crazy. But I believe with XRP and now Ethereum is that the SEC is full of people who are old school traditional finance people. Almost everybody in there is. Even with the SEC, when somebody becomes good enough, they normally leave the SEC and go on to other jobs. So the SEC is full of people who are very close-minded and stuck on certain, following those rules and criteria. So it just seems like it's odd timing to me, but I just think it's a misunderstanding and it's a fear of change. We saw it all with XRP in the last bull market. It was all the fighting. XRP was deemed a security, not a security. At the end, XRP was able to prevail.
Yeah, obviously it's no secret that the SEC does not like crypto, but they need to understand that their actions have ramifications on people's investments and the progress of crypto and the underlying blockchain. And fortunately, Ethereum didn't take too much of a hit recently, but if this continues to develop, no one knows the exact outcome. But I believe a suitable agreement will be reached in light of the approvals already on the Bitcoin ETFs and all of the surrounding good news. It would just seem very odd if all of a sudden this last minute Hail Mary on Ethereum could take hold, considering all of the defeats the SEC has already taken. So let us know in the comments what you think this means for the crypto market and if you think the SEC will gain any traction.
And like I said, if they couldn't deem XRP a security, which was the most likely crypto to be a security, it's going to be impossible for them to deem, Ethereum as a security. Ethereum is the least likely to be a security out of almost the top 10 cryptocurrencies. It's going to be a very difficult uphill battle for them. They're wasting taxpayer dollars. They're wasting our time and they're affecting investors.
Yeah, maybe it's a secret play that they're doing it right now just to keep the price down. And then this is going to magically go away like it did with XRP. Who knows?
Maybe for the ETFs.
Yeah, like you said earlier, this could be a play because you take the BlackRocks of the world, the Fidelities of the world, and some of the other giants. There's always going to be manipulation behind the scenes that we don't know anything about and we can't control. That's why we try to bring you the most up-to-date, best information that is really researched by our team to make sure all of you are up to date on all things crypto, Web 3.0, and AI, because it's so important to not have these knee-jerk reactions and understand what's really happening and not what the clickbait shows you. Okay. We're really excited for the Q&A section today, and we have left more time for this because you guys have asked so many amazing questions. So let's dive right in. Armando, you want to take the first one?
Yeah, so Maria asked, what are your thoughts on staking coins on platforms like Coinbase that supposedly give you nice yields in return? Well, the thing about that is that you have to be very careful because I would say the majority of staking or yield platforms that have existed in the last 5 years have failed. We have Gemini Earn, we have Celsius, we have BlockFi, FTX. The list goes on and on. There's a lot of failures, and what happens is people either lose all of their money or they lose most of their money. So you have to be very careful with these. Sometimes if the yields are too high, that's a sign. Like with Celsius, Celsius was using new investor money to pay yields out, and they weren't using like actual staking to pay the yields out. So eventually that's a Ponzi scheme, and eventually it fails and everybody loses their money. So you have to be very careful with that going forward. I do believe that staking is a great way to make money because you can't stake directly on the Ethereum blockchain and other chains as well. But you have to be careful with the platforms themselves because they're the ones that either have backdoor connections to bad actors or they use other funds to pay your yields out. So you just have to be careful, and I wouldn't put all of my money on one particular platform. I'd spread it out across multiples, and I wouldn't put all of my portfolio in any yield or staking platform.
Yeah, I agree. I stake, but only on Coinbase, just because it all goes back to if something looks too good to be true, it generally is. And in that instance, when we were seeing all these crazy staking yields a year or two ago, it just wasn't realistic that they were going to be able to produce those yields. And that's where the Ponzi schemes set in. And it's just really bad news for everyone.
Yeah, some were 20%.
Yeah, it was crazy.
Yeah.
So Glow asks, what are your thoughts on day trading crypto? Do you do it or have you done it? I don't suggest you do it unless you're going to do it all day, every day, and you really understand the markets, the cycles, the cryptos itself, and how to read the charts and all of the technical information. So many people think that they can watch a $99 course and all of a sudden become a day trader. And guess what? More than likely, you're going to either lose money or you're going to underperform the market if you just did buy and hold and dollar cost averaging strategies.
Yeah, so I believe a lot what Robert said, but I also believe is sometimes there's strategies throughout the day that you can day trade stocks. I don't believe in day trading crypto because the market's immature, it's manipulated, it's volatile, so it's a lot harder to day trade, crypto as opposed to stocks. Stocks, it has to be the right market conditions, the right opportunity, and the right strategy, and you can be successful sometimes, right? But you have to day trading every day is difficult. But you have to make sure that the environment is correct for that.
Okay, our next question comes from Jay Riz. The question is, XDC is similar to XRP. What do you think about the future of XDC? I think XDC is a great alternative to XRP, even though long-term I prefer XRP from a growth perspective and a price perspective. I still think that XRP will thrive once all the bad news is over because I just think it's a better project and it has more adoption. But XDC I hold, and I believe it is a good long-term hold. I just don't think it'll perform as well as XRP in the coming years.
Shoni asks, when do you predict that the bull market will end and how soon will you take your profits? Well, traditionally, if you look at the history of Bitcoin, history of cryptocurrency, Bitcoin is the driver of all markets. So when Bitcoin's halving happens, it's normally a predictor of a Bitcoin and a crypto bull run. So it normally lasts about 14 to 18 months. We have a bull run after that. So when I plan to take profits is I'm gonna ride the bull market up, back down, because I have a long-term outlook on Bitcoin cryptocurrency. So I'm not trying to sell a lot in this bull market, but I have to take some risk off the table. So I'm going to sell 10, 20% at what I consider the top. And we don't know where that's going to be at, but I'm thinking it's about 250, but I have to change my strategy based on how Bitcoin is performing. But I'm going to let it ride, another 4 or 5 years, because I think by 2030 we'll be at 1 million, or maybe even past that, with Bitcoin, and all the other coins are going to go up with it.
Yeah, I think that's a great way to look at it. And you mentioned taking some off the top. And for everyone listening, we're going to be covering a lot of these deeper strategies in the Discord. We're going to be launching here in the coming days and weeks. So keep an eye out for that, because I think it's key for everyone to understand, like I always talk about. When you enter a trade and you enter an investment, you need to have an understanding of what your investment thesis is at the time you're making it, not after the fact, because you have to really understand all of the implications of what you're looking to do with this investment. And that really leads us into one of the key next questions from Samuel. Can you guys talk about how taxes work for crypto gains? We covered this last weekend at the event, and I think this is a huge one that is simply overlooked by all the fake gurus out there on TikTok and Instagram, is they just never understand that every time you sell a crypto, it's a taxable event. They talk about, when you get up 50%, take your profits. And what they don't realize, let's say these are short-term capital gains, you might be up 50%, but if you have short-term capital gains to pay, that could be up to 37% depending on your income level. And so you have to be careful. So one of the tax strategies that I try to talk about is the LIFO strategy, last in, first out. This is a great strategy in bull markets when it's profitable, because you sell your crypto as the last units you purchased, which generally means you paid a higher price than the ones you may have purchased years ago in the same sector or the same coin. The other way to do it is FIFO, which is first in, first out. This is great when markets are down, because strategically generally works better, because you can keep your tax implications lower because you're selling the first coins in a down market to keep that margin lower to help you with your taxes. And another strategy I'm not hearing anyone talking about, and everyone should read up on, is to look at investing in opportunity zones. There are many ways to lower and sometimes mitigate all of your capital gains taxes taxes on cryptocurrency by investing in opportunity zones. So check your local area for what they offer, because you can sometimes, after 5 and even then 10 years, pay zero capital gains on your taxes. And obviously, everyone following along is going to make a ton of money in the next couple of years. And that's one way to pay little to no taxes, is by looking at these opportunity zones as well. Because as we say all the time here at the Crypto Trends Podcast, it's not what you make, it's what you keep. So that's very important. So read up on LIFO and FIFO and really get a handle on it so you understand how much you're actually profiting after you pay the tax man, because so many of these fake gurus don't talk about it, and it drives me nuts, because then so many people sell their entries early and end up really even not making a gain and just trading their money. So I want to thank each and every one of you for listening and following along. You can find us on Instagram at Crypto Trends Podcast and on Spotify, Apple, and YouTube. We are so excited for 2024 and beyond, and sharing all of our crypto insights with all of you. If you love the podcast, please share with a friend and give it a 5-star review, and we'll see you next week.